Hello. Welcome to my channel, my dear friends. My name is Abhilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, finally last week before Christmas, after that we can expect that market will go for unofficial holiday. So as a trader, you also need to give some rest to your brain, give some time to your friends, family, and your dear ones. So, my dear friends, let's look at the market for Monday. We were expecting a drop around 2030 and we got the drop. To be honest, I was not hoping for this candle. Okay, I was thinking that maybe market will break the level with small red candles and we will get to see um, a mini breakdown, or you can say. But here, okay, we got to see a massive breakdown and market came down to the level of 2020-201, and we discussed market middle of 2015. The pressure was quite high, but ultimately we can see that market respected our support level. The best thing that we saw is that market is finally out of the range. So it gives us the confirmation that still we have some trading left before Christmas. And you can expect that Monday, Tuesday, maybe more 2 or 3 days more. After that, market will be less volatile again. The number of trading opportunities will be very limited. So when I saw that market is standing at 2019, okay, I was sleeping. I took a buy position and I slept again. And in the morning I saw that, oh, I forgot to close, and my that account has also swept charges. Okay, let's see. Anyways, if you already have taken a buy just like me at the support level, we will have to see, and we can expect that Monday we will get an exit also. And if market goes up, then we can look for exit around 2023, 2025. Around this level, we can hope that we will get an exit if you have taken a buy at the support of 2020 or 2019. So at first, let's look at the market sentiment here. You can see gold sets back on stronger dollar. Gold retraced below 2020 per ounce on Friday, registering a 0.8% gain for the week. The dip was attributed to a stronger dollar and investors processing some statements from Federal Reserve officials. And if you look at the chart of DXY, you can see that DXY is trying to recover. DXY ultimately closed at 102.59. So you can say that DXY almost closed at the previous support, which will be acting as the new resistance. So the market opening will be very important for DXY, because right after the market opening, we will get a picture whether DXY will be continuing the upside or DXY will fail to break the resistance and DXY reverses. So market opening will be very important for DXY. If we try to look at the overall market of DXY, then obviously there is no doubt that DXY is under immense selling pressure, both fundamentally and technically. So we can expect that if market shows some recovery also, selling pressure will come again, because we do not have any major factor that will bring trend reversal here. And in case DXY breaks 102.6070 level and continues the upside, the next resistance on DXY will be around 103.30. Okay, so let's wait and watch. And as of now, 103.30 or around 103.30, we can expect that DXY will face some serious selling pressure. So let's wait and watch. Market opening will be very important for the US dollar index. My dear friends, if you're looking for financial news updates and you don't know how to do fundamental analysis, then I have a solution for you. FastBull. FastBull not only helps us with their timely news updates, but they also have, you can see, AI signal service. Yes, if you're looking for signals, then you can use their AI powered signals, but keep in mind risk management is important. Okay, and you can see they also provide trading analysis both from the institutions and also from their in-house analysts. You can see the institutional analysis from XM, Swiss Codes, IC Markets, and many more. And on the right hand side, you can see for transparency, they also share the win rate percentage of their in-house analysts. And if you're looking for further information, you can use the institutional data, you can use the central bank data, and there are lots and lots of things. So, my dear friends, FastBull.com is the one-stop solution for traders like us. Check out FastBull. The link is in the description and comment section. And on the chart of gold, we can expect that the weekly range will be 2050 to 2000. If market acts like a typical market before Christmas, then we can expect that there will not be much volatility. Market will be staying inside a range, and the range of the market should be 2050 at the top and 2000 level. In our previous video, we discussed about 2050 as the strong resistance, where we have strong presence of sellers, and we can see that ultimately the sellers won the battle. So the levels that we discussed in our previous video are still the same here. We discussed about 20202019 as the first support. If you have a buy, be on the trade, because you can expect 20-30 pips more. Okay. And in case market falls below 2016, try to exit. Try to exit around 2015, because I will also exit from my position around 2015 and I'll book loss. And the next support on the chart of gold is around 2010. 2010. So the market opening will be very, very important. In my each and every video, I always tell you guys that volatility of the market plays a very important role here. So if the volatility of the market is low, if market acts like a typical Monday market, if you see small candles, then only expect the market to take support around 2010 level. Okay. And 2000 should be the support for the market as of now, the best support. Let's wait and watch. And if you're wondering about resistance, then I don't think so that in this market situation we need to talk about resistance. 2000 2030, okay, 2030 may act as a temporary resistance for day traders, where we can expect the market to struggle a bit. As a day trader, if you see the market is showing some price rejection from above, you can hit the sell button. That's it. Otherwise, 2050 is the only level where we can expect the strong presence of sellers. Okay. See, the market is heading towards Christmas, so as a result, number of trading opportunities are also reducing, because we also need to keep in mind one thing very well, that whenever there is less volume in the market, not only the number of trading opportunities reduces, but also the risk of market manipulation increases. Okay. So we also need to think about our safety, isn't it? And if you look at a weekly chart, then we can see that on the weekly chart, market has shown the strong price rejection from both the side. We can see a spinning top kind of a candle, and spinning top signifies indecision in the market. And if you look at a daily chart, on the daily chart, we can see that market has shown price rejection here, and after that we can see that technically we have a bearish engulfing pattern. Bearish engulfing pattern signifies that sellers have joined in, so as a result, further downside on the market is also possible. So let's wait and watch. Next week will be, yes, the market opening, especially market opening will be important, and first 3 days I think very, very important, because by Thursday, Friday, market should be dull. So right now what I said, then let me wrap it up. So as the market is heading towards Christmas, so as a result, okay, the number of trading opportunities are less, and it will reduce further. And less volume, less volatility doesn't mean less opportunities, but it also means that there is a higher chance of market manipulation. Sometimes you will see that due to less volume, market shows unexpected spikes. So as a result, you need to be careful. So the market opening will be very, very important for DXY and as well as for gold, mostly for DXY, I'll say. So if you have taken a buy at the support, because market closed at support, so we can expect further upside of 20-30 pips, and it would be better if we exit. But in case market goes down, then try to exit below 2015. Okay. On the other hand, we don't have any proper resistance on the chart right now. 2030 may act as a temporary resistance for day traders, but otherwise 2050 is the only logical resistance. Around 2010, we can expect some sort of buying if the volatility of the market is low. And because of Christmas, we can expect that market should stay within the range of 2050 to 2000. That's it. Okay. And 2000, yes, 2000, 2001 should be the support for the market right now, or the best support for the market right now. And time will speak. Okay. So that's all, my dear friends. Enjoy the lovely weekend. Bye bye. Take care. See you tomorrow. Not tomorrow, on Monday.